So, hi there, starting this video with the trade analysis of the day, Thursday, the monthly expiry, the July monthly expiry, 31st of July 2025. I'll just guide you all through the process of what I do and how I analyze the scenario, the bias for today. So, let's go to 15 minutes chart. Just ignore all my drawings. Okay, so this was the market. I won't hide this, but yeah, this was the market, and my bias for today was if you know, let's mark this zone, this big white candle, this range as the supply zone in the higher time frame. Okay, this was the M15 supply zone, and if the market would have opened here, then I would have thought about selling it off, but oppositely, this market just opened a big gap down here, and this was a higher time frame demand zone, you can say. So when the market just capped down 200 points here, then my immediate bias was to buy it, because after such a sell off there are very high chances of market turning around and making new highs. Okay, or not making new highs, just filling up this gap. This gap, it has a high tendency of filling up this gap. So yeah, this was my bias right before the market starting. Let's go to the smaller time frame. This is 1 minute time frame. I'll expand it up. Just listen to what I am saying, you will understand it. So as per my bias, the market opened down, it moved down, took the liquidity, or just took some support here, and when this engulfing happened, it just confirmed this zone. Okay, so this zone got confirmed, and this red candle marked the reverse order block. Okay, from now on I will just write it as ROB. Okay, this is reverse order block, this red candle here, and this gives me a good upward side momentum. And when this happened now, this big candle right here, I entered here for a quick scalp trade, and this was the result. I know it was a high risk high reward thing, but yeah, it was a quick scalp for the day. And you can say at this level, when the uh, even before that, when this continuation two continuation candles formed, I just exited it. So it was a quick 1:1. Yeah, 1:1 here. So my upper zones were also clear. Like, you can say this candle marked the supply, the internal supply, you can say this candle marked the internal supply. And then it fell, it caused a break of structure right here. You can say market structure shift, because it was the structure of the market was on the upper side. So this was actually a correct break of structure. This was a correct break of structure, and in the opposite direction it was just a market structure shift. Then similarly, um, the price didn't come to any of the supply or demand zones, so I waited for it to fell, to come here. And when this thing right here happened, like this sell off came, and then there was a pullback. Correct, when there was a pullback, this red candle then again marks a reverse order block. Okay, as simple as that. You don't have to understand complex smart money concepts to trade in this market. So yeah, it was a reverse order block, and when this happened, I'm going to zoom in on this part. You have to understand this. When something like this happens, like this was a red candle and this was a green candle that was closing above it. So this is a cemented candle or engulfing candle. You can say it whatever you like. So this was a reverse order block zone, and when the price just came here and it simply got engulfed, I entered here with a stop loss to the middle, below the middle of this reverse order block. You may see that this is a liquidity hunt right there, right? This is a LQS, liquidity sweep, right here. So this engulfing candle marked my entry. I entered here with my whatever the quantity I trade. So this was my trade. Yeah. Then what happened is I held on to it. I held on to it to all this time, here. And when this big red candle came, I exited this position right below my internal order block. Okay, this was my internal supply order block, and when this whole order block got filled up immediately, so then after this I exited here. So it was a good 1 is to 2.7, correct? Then immediately what happens is, immediately right after it, this structure forms here. Whole of this sell off got bought in these two candles. So I entered it with the 700 put position. Yeah, it was a 700 put, and immediately it got followed up until I'll tell you my exact exit point. Yeah, this zone. What was this zone? If we trace it back, it was a reverse order block, or you can say it was a demand from last swing, maybe. So this was a uh, blocker for me. So when the price just engulfed here, I'm right now I'm focusing on this structure. So when the price got engulfed, I exited it here. So it was a 1 is to 4, 1 is to 4 trade here, and these are all the trades that I had taken. So yeah, and due to some reasons I was away from the market during this time, so I wouldn't have exited it here. It was a good, you can say, what my ideal exit point would be. That's the question. So my exit exit point would be right here. Here. Why here? Because this is a market structure shift. Correct? This was a market structure shift here when the swing low was swept by this candle. So my exit would be here, or you can say my more accurate exit would be from here. So I would have got some theta decay over this zone, but it's okay. I exited it here. It was enough for me. Yeah, 1 is to 4 was enough. Then comes this part. This was also let me see. This was a fair value gap right here. You can see. You know what's a fair value gap? When in a continuous motion, there is a gap between first and the third candle. You can just simply mark it as a fair value gap. So when the price retraced back to the fair value gap and this engulfing happened. So in the ideal case, I would have taken a trade here with the stop loss of here, and it was a nice 1 is to 4. But yeah, I didn't take this trade, so I just watched it during the closing times. Yeah, during this time, I shifted to 3 minute frame, and this block right here marked the reverse or order block. I will just write it as ROB. So this marked the reverse order block, and this engulfing happened here in this candle. So I was a little late in entering this position, but yeah, I entered here, and it was a good 1:2. 1:2, it was a good 1:2. And then again, when this regress sell off was coming, so my fourth position of the day was right here. So at the end of the day, per lot, I was able to make around 5k per lot. That concludes to on an expiry day, it is the margin requirement is close to 2 lakhs, 2 lakhs something. So it was 2.5%. But on as compared to the regular any regular day, it was around 4% on a 1 lakh capital, 1.5 lakhs capital. So yeah, that was the process for me today. See, whatever the things I'm telling you, they are definitely not easy, and it took me a lot of time to learn all these things. I started in 2021, and yep, I learned from a lot of sources and a lot of mentors. But in 2025, mm, April, April 2025, it was my, like, I feel this is my time where I have just become a break even trader. So yeah, right from here, I was a loss making trader, and then I have just come to this break even, and the future holds my potential. So let's see what I will become by 2030. Yep. So peace out, guys. Uh, I don't know how many people will watch this. I won't share any of these videos with anyone. Uh, yeah, I know there is a lot of value hidden in these videos. So I hope it comes to someone जो टेढ़ा रास्ता जाना पसंद करे, because it's a टेढ़ा रास्ता for so many people. Peace out, guys. Good evening. Good night. Bye bye.